that the lender will give them or is available from the lender, there are like about 6 of them. Okay. 4 of them is pertain to them keeping the home. And one of them is the reinstatement, which we know what it is. So the first thing they're going to ask, are you guys wanting to, reinstate your loan? Do you want to pay your past due? Do you want to catch up and, pay your arrears? They call that the reinstatement amount. That will allow them to bring the mortgage current. So that way, they can keep their home. And that has to, they're going to tell them, okay, you have to pay by certain day, and this is the certain amount that you have to pay. And then everything's going to be okay, hunky-dory, and then they start back on their loan and, like nothing happened. It's just going to be a late payment on their mortgage. It's going to be like it hits like a late payment on their credit, and they'd be able to take some of the late payment off, like every year, they'd be able to take one late payment off. So they can call it every year, and they will be able to take like one late payment off till they get their credit back to, okay status or back to being good. Then the next plan that they have is a repayment plan. So what they're going to do, it's depending on the back payment that they have, they either going to like say, okay, you're 3 months behind, you want to work it out, and you want to repay your like past due, but you can't do it all at once. You can't reinstate it. So what we're going to do, we're going to make a payment plan for you. So that payment plan could be like, partial every month, or one payment added to their payment every month. Like if their payment is $1,000 a month and they're like behind $3,000, they say, okay, we either, make it that $3,000, we section it up in 500 and add it to your $1,000 for 6 months. So that way you can pay that up and catch up with your arrears. That is one of the other option, the repayment plan. Then they have forbearance plan, which most people kind of like get confused that, oh, they didn't give me a forbearance plan. Actually, forbearance plan, but what the forbearance plan does, it just pauses the payment for 2 months, for 3 months, for 6 months. It just pauses the payment. But after that, they have to catch up. They have to bring that back up, and pay their past due amount. So sometimes, if you know that you are about, if they know that they're about to get like some big lump sum of money in like 3 months, like an inheritance or, bonus or whatever, the forbearance plan works because they be able to like end of that 2 months or 3 months, they be able to pay that payments. But if they know that they're out of work and they're not going to be able to get that chunk back, the forbearance plans, it's not a good option. But that's also one of the options that the lender will be able to give them to kind of like stop the foreclosure and help them to keep the home. The next one, it will be the modification. So the modification is what they totally create a brand new loan customized to that homeowner after they qualify them, what their, payments, what their income is. So all in that modification plan could have, the repayment or forbearance in there. You know what I mean? So with the modification, if the homeowner doesn't qualify, if they get denial, then the denial that means they didn't get their income qualified. They didn't make enough money to be qualified for loan modification. Because what they do in loan modification, they might change their rate, they might change their payment, they might change the years that they're going to have, like from 30 years to put it to 40 years, and the interest rate. And any of these could affect their payment. If they increase the, interest rate on it, that automatically going to increase their payment. Then they might not be able to qualify for it, depending on the money that they're making and the pay stub and documents that they provided, because they have to show all of these documents. They have to show pay stub, they have to show bank statement, they have to show the income, the IRS income, their income paper. Automatically, they're going to get the lender going to get an authorization from them that going to have access to the IRS with their Social Security to check their, what they claimed and what they made last year. So according to all of those, they will give them a loan modification. And if their income doesn't qualify, then they won't be able to give it to them. Which, after exhausting all these four, then they're going to go to short sale. And that also, they need to qualify for it. So what happened with the short sale is basically when the house is underwater, it's worth, like, we'll say the market value is $100,000, but they can't sell it more than $70,000. And the loan that they have is like $90,000. So it's not going to cover for all of the expenses, closing costs, realtor, and all of that stuff. That's when the short sale comes, to play. That would be the only way that they'd be able to get rid of the house. So in order to do that with the short sale, with any if you want to talk to, if someone wants to talk on behalf of the homeowner or want to have access to their account, the lender has to have an authorization to talk to that person. So that's where the authorization comes from. We need to have authorization in order to, sorry.
I was going to ask a question, Nahid. On both of these, obviously the homeowner credit is completely tanked. They've been struggling. They haven't been able to pay the bills, maybe they've been in hospital, nothing's
Yeah.
been paid. The
Yeah.
credit card's shot. So how does the bank allow for that? Or, I mean,
Yeah, their credit is, they will look at their credit, and that's how it doesn't, the homeowner can say, oh, I was sick, I was this, they can build up a story. But the way the lender will check by pulling their credit. By pulling their credit, they sent people to the house, drive through. Have you ever seen, like, whenever you look at Zillow, there is a picture of the property and the picture of the street, like the front of like the street that it's in there, which is like, why do I want to look at the picture of the street? That is when that someone has been there, like from the lender, to got picture to be able to verify that this house is in this street and it's located there.
hmm,
So, but that's how they're going to verify that they've been in a real hardship.
yeah,
And for them, it doesn't matter. Their credit doesn't matter because they are having that. They're First of all, they have a history with this homeowner. Second of all, it is backed by the house,
hmm.
and they still gonna make money.
Yeah,
So
so the bank will be lenient. Say the situation is, the income earner was in hospital, for
yes,
that. They had a
yeah,
serious accident. Let's
yeah,
imagine that. And,
yes,
they were in hospital 3 months or
yes,
something,
yes,
is the bank going to take compassion because the credit score is gone down
yes.
the plug hole, They are.
But
Okay.
at the end of it, they still need to be able to pay. So
Hmm.
yeah, I was out for 3 months. I was out for 6 months, but I
Hmm.
still have my job and I'm going
Right.
back to work. And this is
Hmm.
going to be my payment. This is going to be what I'm going to be making. This is going to be my paycheck. And that's
Right.
how they're going to be able to modify them and give them a new plan. If that
Right. But
person doesn't have
so,
any income, go
right.
ahead.
I was going to say, let's imagine that they've been in hospital 3 months, they're recovering 3 months, they're not going back to their job, but they do have insurance.
Like what kind of like a life insurance or something?
Yeah, yeah. So they have this
Yeah.
event covered by insurance. Will the bank take that into account, even though they've obviously
At
can't
that point,
work?
if the only insurance that I know will do that is a permanent life insurance.
Hmm,
That you have a permanent life insurance for yourself, that it covers you for long-term care, short-term care, and it has an income
hmm.
in it.
Okay.
Depending on if you have money in there,
Hmm,
if your life insurance has a cash value in there, they be
hmm,
able to borrow out of that
hmm,
and pay their arrears. And at that point, you can borrow that money for whatever reason that you want.
hmm,
If they have a 401k, 401k you can borrow that money. If you have a 401k that has the money in there, you can borrow from it without penalty.
hmm.
To pay your rear. You can tell them that, yeah, I'm going through foreclosure. They want some paperwork. It's going to take a little bit of time, with 401k versus the permanent life insurance, because in the permanent life insurance, if you do have the cash value in there, you just call and say, hey, I want my, like, depending on how many years you had it, you can borrow anywhere from, like, 50% to 100% of it, depending on how long you have had that. You just call them, and
Yeah.
then 24 hours later, that money is in your bank account. you know, and then
right.
you'll be able
Same
to
with
pay.
and same with infinite banking. If you've taken out a
Yes,
whole lot of policy, say,
yes,
you're about to borrow against it. So
yes.
they do take that into account.
They won't see the, you know, yes, but they cannot by law, nobody can touch your permanent life insurance. And it's not visible to everybody else that how much is in there. So, you know, permanent life insurance, like your whole life, your index, universal life, all of that stuff, it is totally like safe from predator, judgment, creditor. Nobody, IRS, nobody can touch that. So
That's
that is
wonderful.
the
Yeah.
homeowner's prerogative. Yeah,
Yeah.
that's like the number one tool that number one thing that I would tell anyone to have, because there's nothing that compares that you'll be able to save yourself. Anyway,
Right.
that's the thing for another you know, so another Zoom. But they be able, yeah, if they want to, yeah, they can, if they have the money in there, whether it's in 401k or is in permanent life insurance, they can borrow that and pay their arrears, but the lender would not see it. So if the
No.
homeowner don't tell
And
them,
the homeowner doesn't have to declare it.
no,
Is that
yeah, they don't.
that's very
They
good.
don't. Yeah, I mean, it's, you know, it's a match. If
Mm,
the homeowner, you know, here it is, I'm trying to work it out with you. If you're not being forefront with me, and then I find out that, oh, you have a life insurance or you have a 401k, you know,
mm,
or down the line, you know, you just didn't want to save the home.
mm,
I can't squeeze anything out of you if you don't want to. If you don't want to help yourself, I can't force you to help yourself.
mm.
You know what I
Thank you.
mean?
Yeah, very interesting.
Yeah. Allie, you have a question?
Yes, I have a couple. All
Okay.
right. So, I guess like the simpler question, is income the only reason that a loan modification will get declined or denied?
Yes. Yes. Because
Okay.
think about that. If, you know, if they're behind $3,000, we're just going hypothetical stuff, and their, you know, their loan payment is like, you know, $500 a month, and they're only making, you know, $800 a month. In normal situation, even if you want to go rent, your income has to be 3 times your rent, your mortgage. They can stretch it up to 50%, but anything above that, it's not going to work. By law, they can't give you or do that to you. You know what I mean? So if their income will not going to be enough that they're going to, you know, pay their monthly plus a little bit of what they have to, you know, what they have in arrears, or even not, if they put the arrears on the back and then increase their interest rate, if they can't pay that, then they're not going to get qualified. Income is the only reason that they're not going to get qualified for workout,
Okay.
you know?
250.
So Deanna
Next.
asking is how long is going to take for loan modification for usually it's going to take anywhere from like 2 to 4 months. You know, they're going to it's going to go to their underwriter, they're going to look at all their documents, their bank statement, their you know, pay stub, they verify, they verify employment, their income through IRS. And if all of that works out, then they're going to send them a, modification plan. And if not, then they're going to tell them also that they're not going to, qualify. And then, that's what it's going to be. And, unfortunately, they're not going to have any option than going the short sale route, which is going to have a less impact on their credit. It's going to show as settled, but, is something that they're optional. And for those that they have applied for a loan modification and they didn't get qualified, doing short sale is another chance for them to start another way for the lender to look at their situation for a loan modification, because by law they have to consider workout before they accept the short sale. So, when we have the authorization, like some companies, some lenders, they automatically want to have their workout application to be sent out to them with the offer that and the authorization that you send it to them. So the homeowner has to have all of their documents and, workout application, homeowner assistant application filled out to be sent out to the lender with those documents. So when that goes there, that automatically goes to the loss mitigation department. And loss mitigation is going to send that to the, workout department. They're going to look at all the stuff, and then it's going to go to the liquidation department. If they don't get qualified for the loan modification or any other workout, then it goes to the liquidation department. And in the liquidation department, the underwriter is going to look at it. Okay, in this offer that it came here, is it what kind of a loan is it? Is it a Fannie Mae loan? If it's a HUD loan, is it a government backed loan, or is it just a regular conventional loan? If it's a government backed loan, they have their own criteria that they have to follow. Like how much percentage of the payoff they be able to, or the loan they be able to accept. They're going to send an appraisal like a regular sell. They're going to send an appraisal to appraise the house to see how much is worth. And depending on that appraisal, they can accept a certain percentage of the proceed. So for example, if the appraisal comes out at 100,000, like in HUD, they have, a certain percentage, and they can't go any lower than that, even though that the loan is 120,000. The appraisal came in at 100,000. Okay, you put an offer at 50,000. The HUD says, I can only accept 70% of the appraisal value, which is 70,000. So you either have to give me 70,000 or we're going to foreclose. And that's how the short sale part of it works out. You're kind of like, dealing with an institutional seller, not the emotional seller. So the homeowner has like no, what they call it, no play in here to say, oh, I don't want to sell it, or I want to sell it, or whatever I want to do with it. Is the lender that is going to decide what's the price is going to be and how is this going to play or go. And if that doesn't work out, if the buyer backs out and say, okay, I don't want to pay 50,000 because 70,000 is too much, then the homeowner, then they can give them an option of a deed in lieu. And what the deed in lieu is that I'm just going to sign the deed to the lender and that will be it. In these two options, lender always give them a moving incentive if they're living in the house still, which they call the deed in lieu cash for key also. So cash for key and deed in lieu are the same.
Is the debt forgiven? And deed in lieu, is the debt forgiven in its entirety?
Yeah, in short sale the same way too, but they could have tax consequences.
Yeah.
The debt will be forgiven, but it could have tax consequences. But
so the deed in lieu, is it the entire amount that's tax
no.
Okay.
It's what they have. Yeah, entire amount of the loan.
Entire amount of the loan is considered income by the tax code, right? So
Yes.
that would be quite a tax hit.
Yes, but when you didn't really make any, you didn't make it, you didn't get it. So, you can just make it as a loss, even though that you get a 1099-C for it.
Okay, the IRS will not come chasing you for that. Is that right?
Yeah,
Okay.
no, it won't. So, that's something also that, I'm not a tax person, so they have to talk to their tax strategist or, whoever is filing their income taxes. But I have not seen anything, I have not had any problem with that for the homeowner so
We
far.
can ask James Crenshaw about that.
Yeah.
Now I know the CPA on the team, and Graham.
Okay, cool.
Um,
Yeah.
he'll
Yeah,
probably
we
be
can.
here. It's tax season, so he's a little busy these days, but he'll be on a couple weeks from now, probably.
Yeah. Cool. So Cody asked,
Nahid, one question.
yeah, go ahead. ahead.
So you gave that example of like a short sale. Hey, let's say the seller owes, or you said like 100,000.
The
Like the
seller
seller's
owes
behind 100.
90,000. Yeah.
Yeah, and the seller can only sell it for 70,
Mhm.
right? And the loan is 90. Selling won't cover all those expenses. But when you go to the lender, how do they know that statement's true?
As far as what?
Like I can only sell this for 70.
That's the number that the lender comes with. That's the number that the lender will figure out. Okay,
Okay.
market value is 100,000. Okay,
Mm-hmm.
they owe 120,000. All right. So obviously they owe 20,000 more than what the market is going to give them, right? So they want to do a short sale because they can't, but they've been in the market for 6 months and nobody had taken a bite because the house is like overpriced. So they're going to start doing a short sale. What the lender will do, will do an appraisal, actual appraisal. Send the appraisal over there. They're going to appraise the house. They're going to come out and the appraisal say, yeah, this house only worth $90,000. So that $30,000 is going to be washed. Now, depending on what kind of a loan is this, if it's a government loan or if it's a conventional loan, they have some rules and regulation that they have to go by. If they're a government loan, they can go down to certain percentage even below the appraisal value. Does that make sense? So like, for example, the market is says 100,000, the market says, oh, this is 50,000, you know, it's $50,000, and the appraisal came out at, you know, $80,000. And, you know, the HUD, if it's a government loan, the government loan say, okay, we can go down like 30% or 40% below what the appraisal value is. So if the appraisal value was 100,000, we can take a $60,000. So that whole, like, for, you know, that $60,000 that the homeowner owes, it's that debt will be forgiven, because they're not going to be able to, you know, they're not going to be able to get that money. Lender won't be able to get that money because neither the market will not support it. Does that make sense?
Yes. So then some of the situations I've been running into is, let's do an example of this homeowner owes 50,000.
Are you frozen? Or am I the one that frozen?
We can hear you, Nahid.
Yeah, she froze.
Oh, she froze. Okay. So
She freezes a lot, so we're gonna buy a new computer for her.
maybe a new router works. So till she comes back, Cody asked, is the COVID recovery stand? Yes, you're back. No, it's gone. So he said he's asking, is a COVID recovery standalone partial claim considered a loan modification? Yeah, you know, the partial claim is also part of the loan modification. In a loan modification, the homeowner could get all of it. It could get a partial claim, which means the arrears could be put on the back of the loan. You know, that is partial claim. And then it could be that change their interest rate. It could be change of payment, a year's extended so they don't, you know, their payment going to be smaller. So all of those could be in a loan modification. You know? So that's the, you know, how they're going to be able to help. And, you know, Adida Lou is just in with all of the, like, so far I have been able to, like, if the homeowner has been living in the house and they are, and that is one of the condition, that if they are still occupying the property, I'd be able to get them up to $10,000 of moving expenses for them. You know, so that could be one incentive for them, that they're going to be able to, you know, do stay. I mean, the like help them with the moving cost, make the process easier for them, and not having a, you know, a heartache. That could help out a lot for them, you know, to put them in the new house. So Alice and example, 50K is on rears. The balance is 150. as is value is 300. Seller is not able to qualify for payment plan and modification and etc. Can they still qualify for short sale? Yeah. Yeah, short sale basically it's like however you want to call it. This could be just a regular sale because if they have equity in it, because that the balance and the arrears is going to get add up. So now their 200,000 is their balance, not 150. And it's going to have some kind of, fees and stuff like that. So they still be able to get some money out of it and make some money out of it. But, you can call it a short sale because then they still will be able to open them up for some kind of a workout. And if they have a change in their situation, in their income, they could have, now qualify for a loan modification. Who knows?
So,
So-
so if that situation happens,
Uh-huh.
are they able to use, like, let's say though the auctions next week, they tried everything to try to keep it. They do
Uh-huh.
have equity where they could sell it, but there's not enough time. At
Uh-huh.
that point, are the lenders usually open to cooperating and like, hey, we're going to list this on the market? Or do they now need to resort to file bankruptcy or have some other way to stop the
Depending.
auction?
Yeah, depending on how the lender is, there are strategies that you can use. You can, get them stop the auction. But if you can't, then yeah, bankruptcy will be unfortunately the only option. As I said, 37 days to the auction, no lender is obligated to work out with you because they had 6 months, according to the lender, they had 6 months that they have been trying to get a hold of this person over and over and over and over through phone call, through mail, through sending somebody over their door knocker and all of that stuff, and they've been ignoring them. So, and if
Okay.
they're not obligated to do that. And if they
Recording
won't
stopped.
if they won't hear it, then at that point is going to be like they have to do some kind of a legal thing, like a bankruptcy or something like that to stop it. Then they can do a short sale and sell the property and take equity, get their equity. But it is going to be in their incentive to start it earlier so that way they can get their equity, whatever it is, out of the property.
Mm.
You
Okay, that
know?
makes sense.
Yeah.
Yeah,
So
no,
then-
you can-
Wait,
okay,
one
go
more, and then I'm done. I'll
Go
shut up for the
ahead.
rest of the night.
No,
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 Alright.
no. Go ahead.
Go ahead.
So another situation I'm coming across is the homeowners, they'll say like, hey, I filed for a loan modification. And then, you kind of explain like, okay, typically a lot of loan modifications, like 25% don't go through. If that happens, which I hope it doesn't, do you have a backup plan? And they're like, yeah, I'm gonna just file bankruptcy. Is there like any other alternative we should try to be like, hey, you probably don't want to do that if they want to keep the home?
Yeah, if they want to keep the home, bankruptcy is going to be their only option. But again, on that one, also they have to qualify. Because they're gonna now their modification is in front of the judge. And the judge and the lawyer going to figure out how much are they going to make, what are their bills and how much their expenses are, and can they afford this house? Because they have to pay, they're gonna like put the payment plan for them. They're gonna put the car and the house and the credit card and whatever it is in one bill or separate bill. Your credit card will be this much, your car payment would be this much. And now they have to pay by law, they have to pay these payments. And if they're not making money, they're just kicking the can down the road. They're like, how many years can they do that? Till the lender's gonna finally go to the judge and say, hey, these people have been filing bankruptcy for over like 5 years, every single time. Because they don't want to pay. And the finally judge is gonna say, yeah, go ahead and foreclose. Because they have no intention of working with the lender. They're just trying to squeeze all the resources and money and whatever to stay there for free. And that happens a lot in, the judicial states like New York's and all that stuff, that it takes a long time for the foreclosure to go through. Imagine it's like in New York, it takes like 13 months or 14 months. And all of a sudden, the day before the foreclosure auction, they file bankruptcy. So they have to go through that. And here goes another, God knows how long, and then the cycle just keeps repeating, like that lady that we listened last time, So that's
Yeah.
they one bad seed will get everybody into the hole, unfortunately.
Okay. No, thank you. That makes a lot of sense.
No
I
problem.
have another question.
Yeah.
We come across banks or any lending institution, some of them really delay foreclosing for a very long time, years. Can you
Yeah.
help me understand the mentality of that?
I mean, really, the bank don't want to foreclose because then it's gonna cost them way more to upkeep the property and to go through all those nuances. Like, think about if you have a rental that is sitting there vacant.
Hmm.
What do you have to do?
Have
You
to
have
fill
to
it with
keep
tenants.
Yeah, but you're not, you're a one-man show, but with the lender, they have to go through getting approval from 5 million people. As I said, when there's, just to start, when you call the lender, you talk to the customer service. Then there is a loss mitigate, then it goes to the loss mitigation department. Then it's gonna go to the oh my God, now it's like all of it gone off my brain. From loss mitigation, it's gonna go to preservation department. There is a foreclosure department. There is a liquidation department. There is a lost draft department. There's an insurance department. And none of these, God forbid, know what the other one does. They don't really communicate with each other. The thumb doesn't know that the index finger exists. They have to, and they don't have like, oh, so and so, you're the, they don't have a specific person that they can call. They all talk through the Google chat. They have a supervisor that has a supervisor that has a supervisor, and God forbid it's like the ball drop in the middle, then the whole thing, it's going to be like 6 years before they realize, oh, okay, this is like sitting here and this person has been sitting in the house for free or it's been vacant for 6 years. And
Wow.
this person still has the loan on it,
Yeah. It's like dressing a wound and never changing the dressing, you know?
dresser. Yeah. Unfortunately, that's the system.
Okay, and the banks are quite happy losing money that way instead of going through the foreclosure
Bank, yeah, because I mean, I'm not saying that they're happy about it, but it's going to cost them more than having foreclosed and have it vacant than
Right.
having someone living in it already,
Mm,
you know?
okay.
That's why they're not like really sometime unless they're like small lender like me and you that
Mm.
we're the only one and the small lenders are the only one that they are very proactive. And you see most of the big lender, the moment these loan become delinquent after a year or so, it's going to keep getting sold to the next one, to the next one, to the next one. So there's still money to be made out of it, and they still make money from it, even though that they sell it, you know.
I
the-
know, and that's what makes me suspect that they do it on purpose. Because I was a realtor, I was listing a property
Mhm,
where he defaulted for 8 years. And they weren't foreclosing on it. And I
mhm.
couldn't understand it, but I mean, the interest still is accruing, and so
Yeah.
the banks are kind of making money because when the property sells, they get the money.
Yeah, some of them, some of these properties are, government loan properties. They're HUD properties. They're Fannie Mae's properties. They're Freddie Mac properties. They're not like a small institute of the Bank of America. They're backed by HUD. So if they're backed by HUD will pay them money already because that's where they get that, homeowner, the mortgage insurance from the homeowner when they give them a loan. When you get a HUD loan,
Yeah.
they automatically give you a mortgage insurance that's added. That's automatically, if the homeowner defaulted on it, the HUD automatically going to pay them their loan.
Okay, so they don't need to
So
foreclose then. Yeah.
yeah, why would they, want to foreclose that to go through, uh, constantly take care of the maintenance and, the like all of that stuff.
Gotcha. Yep.
So yeah, I mean, they're all of these things that works in the back that we as a small consumer, we won't know. And trust me, banks are not out there to lose money. By no way and no how they will lose money even when you think they're losing money. No. So it's pretty incredible that how the banking system works. But yeah, it's just for us that we're trying to help the homeowner. We just have to know the whole process, that how it works and what it works, so that way we'll be able to educate them a lot better, and kind of put them in a right path. One other thing that I wanted to talk about is when you guys talk to the homeowner and ask them if someone has given them option, I want you guys to ask them, have they talked to the lender? There's basically, you know, 2 or 3 uh, places that the homeowner can go and get help. One is NACA, NACK. I'm going to put that in the chat. NACA is a government back, oops, .com is a government back agency that it will put the homeowners right in front of their lenders, and they're going to be able to, you know, be the middleman like what I'm doing for the homeowner. And the government will pay them. By no, how do I say this? If anyone asks the homeowner to pay for the loan modification, help them process this thing and all of that stuff, it is illegal. They can get in real big trouble, like jail time. So, because all of these are there for them for free, they can call the lender and they can get it, the lender can help them out. They can call NACA and NACA will help them out. They can call their estate. It is right on the website, on their estate, on the hardest hit fund. When they go there on the hardest hit fund, they're going to be able to bring out their estate. They can click on it. There's an application there. There's, a phone number there that they can call. Some of the estate's funds, the state has already deployed their fund and their application time is closed. But there's still other help out there for them that they can, look for, that is usually listed on those websites for them, that they can go get help. And this is like all the way to like paying their, taxes that they are behind, their water bill that they are behind, and all of that stuff. But we cannot, like, unless you're a government agency, even the government agency cannot ask for money. And even if you want to do that, ethically, you really shouldn't. Because every dollar that they have, it should go to pay their mortgage so they can keep their home. That's the right thing to do for the homeowner. So
That's
If-
ARPA, isn't it? American Rescue Plan Act. Yeah.
yeah, it's a hardest hit fund. It's
Yeah.
a HFA. I can put that on the chat also for you guys. You'll be able to see. Where'd that go? Hold on a minute. Yeah, it's definitely is something that when we talk to the homeowner, we should let them know that this is the option that they have. And there's a lot of money in there for the state. And if they don't use it, they lose it. They absolutely lose it. As I said, it's like you see a bunch of ads for like how to get your butt big and boobs big and, have more hair in your head, but nothing on these type of things that to help homeowner to keep their, home and get their life straightened away. Because yeah, some of them, they go through bad time and hardship, so they definitely need help. So I hope that this kind of like gave you guys a little bit of a, insight of how this whole thing works and how to go about it. Any question?
That's very good. Thank you.
Yeah, definitely.
No problem. No problem. Hope that it's, it kind of give you guys a little insight when you guys talking to your homeowners. You'll be able to kind of like, get more out of them and help them out to understand how the process works and what options they have.
Yeah, well, just one thought on that. Would it be bad to ask them what their income is? And so that will give
Yeah,
us.
you don't want to go through those. You don't
Oh.
want to go through those. Yeah,
Right.
you don't want to
I
go
don't
through
want
those.
to.
Yeah. Yeah, to details. You just want to be able to let them know, did you know that you have an option? Have you contacted your lender? Because they're there to help you. And if they can't help you, have you contacted your estate? Because that's free money that you can get and have access to. And they're going to give it to the lender. They don't give it to them. If they think that, oh, yeah, let me go get that. No, that money, if they qualify, it's straight given to the lender. And that's where another way that the lender makes money. It's like they literally pay a year before and a year after, whatever their arrears are, and a year forward to the lender to let the homeowner to catch up and get back on track.
Oh,
That's
if
a
I
lot
was,
of money.
yeah, if I was the lender, I'd tell everyone who's in default
Yeah,
about that.
that's what their incentive is. And they do, if only the homeowner call. If only the homeowner, call. They reach out their hands. There is plenty of hands to grab it, to lift them up. But they're just so gun shy and emotionally drained and, stressed out that they will not go. They just don't want to go through it. They don't want to do it.
Is there a limit that you can qualify for, or it's like, or you can only qualify for, let's say, up to $10,000, or it's like.
I barely can understand what you're saying.
1 second.
Okay.
Hear me better?
Yes.
Awesome. Now, my question was, is there like a limit what you can qualify for when that situation comes up, or it depends?
It depends. Each state has their own limitation. Like in California, they only pay up to $80,000 of the arrears. Sometimes they pay that 80,000 and then you have to catch up the rest. Sometimes they're just like, no, that's not gonna work. So it depending on what state they're in, they got to figure out what the limit is, and then they'll be able to pay. I had a homeowner here that in California that applied for it, and she was a lawyer. She went through a hard time for a bit, and got COVID and all of that stuff. But she came back, and she was a injury lawyer attorney, and she fell behind on their home, but then it got back, had some cases that they were going to pay. But at that time, it was just like, apply for the state. And she got qualified and they paid all her arrears, and and that is forgiven. It's not even like put in the back of the loan, or it's not like a partial claim or anything like that. That's loan paid off, and they're like nothing ever happened. So that is.
So do they pay the reinstatement part of it first and then some payments, or
Whatever it's it's behind, and late fees, everything, they catch them up completely,
Very
from
good.
water
That's-
bill to the lender to whatever it is that they are behind, up to that limit that the state has.
So even though you have, like, let's say $50,000, and you said that in California it's up to $80,000. So if you actually qualify for it, so they pay the $50,000, so your home is paid off.
Yep.
Oh wow.
If that, they only pay for your arrears, not your payment, not your balance. If you're,
got
if you owe 50,000 and your rears are also 50,000, now, you know, your loan is 100,000, they're gonna pay your rears are 50,000 and then get you catch up so you can pay the rest of your 50,000.
Got it. Thank you.
You're welcome.
What could be the
Mhm.
possible reason that they will be like they will not be approved if they would try to contact their state to ask for
It-
assistance?
Again, the same thing, it's gonna, each state gonna have their own criteria. You know, they're gonna, like, again, they're gonna look at the income, the situation that they were in, the money, like how much their rears are and all of that stuff. Usually it is stated on their state, you know, like what is their eligibility is, you know? So, like, for example, if we go to Texas, I'm gonna share my screen with you guys. So that way you'll be able to see. Okay. Like, okay. So like this is for home assistant for Texas. The program is closed. So there's no help for homeowner in Texas, but they have other resources that they can call and find out. And these are, you know, program document and resources that they're gonna like give them, that they're gonna be able to, through these, they're gonna be able to find out. And then their application is already here, you know, then they have other resources. They just need to reach out, you know? And then, so that's one. Like, for example, if we want to go to, we'll say New York, you know, this is also closed. These are like most of the places that people are like, you know, get help a lot. So these are the, you know, it gives them everything, what their resources, what they can do, what they cannot do. Like this is another source for them that they can do. You know, even though that they're closed, they're gonna have some other program that they can go. Like we'll go to California, you know. These are, you know, they pay their property taxes. They're gonna have a mortgage relief. They're gonna pay the loan. They're gonna have the reverse mortgage. They're gonna pay all of these. And you just go in there and it will tell you who's eligible in their term sheet and, you know, how to get it started, what to do, and all of that stuff. All of their question is being you know, being answered over here. You know, how much assistance is available for me? $80,000, you know, and all of that. Yeah.
Welcome.
Bagu, you have a problem? You have a question?
Yes, I do. It's actually based on what you're showing us right now.
Mhm.
I was thinking, I'm not sure if this is a good idea, but I want to start door knocking, and I was thinking if I made a list of like in the county that I was going to go for, making a list of the possible resources on a flyer, and then while I'm
Mhm.
door knocking, putting that as a resource. I wasn't sure if that was a good idea or not.
Yeah, yeah, because basically what are you trying to help homeowner out? You know, so these are, as I said, you see a bunch of commercial about how to get your butt, your hair, your like all of that. You don't see none of these. So I'm pretty sure they're going to appreciate, you know, if they see something that is going to be useful for them that they had no clue. most of these people, they have no idea that there are all these helps available. They think, oh my God, I haven't paid my mortgage and then I'm done. I'm going to lose my house and there's nothing I can do. You know, they don't know that they can borrow from their 401k if they have a 401k. You know, I would not recommend get them a hard money lender to pay that arrears, because it's like going to make their situation worse when these kind of programs are available. You know, so why not? I think that's a brilliant idea. For
Thank
sure.
you.
Hmm.
Thank-
Any other question? No.
Actually, I have another one. It has to do with door knocking because I have
Yeah.
time in my area, and I was wondering how would you even begin to start knocking? Like, what would you say or want to
Okay.
say?
With door knocking, you all, even when you do a phone call, you want to make sure you are talking to a person that is, their name is on the deed. You want to be able to talk to that person. With door knocking, I would like to approach it as, you know, like, I would approach it at two ways. One, like a regular sell. Hey, I have a family member that they're trying to, buy a house. Do you know anybody that would want to sell? That's one. And then through the conversation, if they tell you that what's their situation is, that's a different. Okay. Another is like, oh, like a neighbor, one of the neighbors here is going through foreclosure. And I was wondering if they have gotten help. We are advocate in, if you know them, can you give them this information? So that way you're not like approaching them directly, but they kind of like, they don't know, and they will be able to use that information for themselves. You know what I mean?
Yes.
So, because I've had people that they have door knocked, spoke to the wrong person, spoke to the mother of the, homeowner, and she went almost to a cardiac arrest because they didn't know that what was going on. And since I'm a foreclosure, like I was helping them, help them out, they gave my number to the homeowner, that this is the person that's helping us out. And I had no clue that they were doing a door knocking. They were in this person's house. So this person calling me that, I'm going to call the police on you. How dare you, told my mom this, which is, private information. Yeah. I was about to lose my mom and this and that. Yeah. It could have been a huger problem. Thank God the cops was like, well, I can't do anything. Otherwise, I wouldn't be here talking to you guys right now. So it's very, very imperative. And they come as in a protective, community. There are protective community. So it's like by law, they are protected because they're the first one to get scammed and taken advantage of. And literally, if you guys, I'm going to show one more thing in my screen. Let me see. These were, hold on, let me see. No. There, okay. they all talk about scam. Scammer often try to take advantage of consumer when they are most vulnerable. To learn more about scam, please visit the Consumer Financial Protection Bureau. So when you go over here, you know, I'm going to read these and you tell me how many of these we have not heard. Ask you to pay a fee upfront to receive services. Promise to get your loan modification. Ask you to sign over the title to your property. Ask you to sign a paper that you do not understand. Say you should start making payment to someone other than your servicer or lender. Tell you to stop making mortgage loans payment altogether. Like, yeah. You don't want to be in these things because every single one of their site is forewarn people about these scam. That's why most of the time when you call, they're going to say no, or they're just going to automatically shut the door on you because they have been, you know, constantly forewarned. Unfortunately, they're, you know, I got a call also today that somebody, one wholesaler, was telling me that that the homeowner trying to work it out, and somebody did the same exact thing. They came in as like, oh, we're going to help you out. You can pay us the money, and you know, now they're have no money, and come to find out there were not even people to like legal. So, yeah, there are a lot of scams out there. So according to these, we gotta kind of like figure out like how we be able, I mean, we're there to help them out. We are totally different than that, those people, but just in general, just to have it in the back of your head that if you're getting resistant from the homeowners, these are the things that it's happening in the back. Right? Any other question? Allison?
Yeah,
Go ahead.
I just had this situation before. So
Mhm.
basically, the bank did some cleaning. They pay for a company to do it before the foreclosure date, and now they're
Mhm.
charging the homeowner for the recovery fee. Something. Is there a way to avoid
Yeah,
that payment or not pay that payment
yeah,
since they did that before the foreclosure date?
yeah, they should not pay anything, you know, unless is a lawyer, and the lawyer is not even going to charge them till after the fact. I don't know who it
Oh,
is. You know, I don't know who it is, but no company should charge them. And if they do, they can go to CFPB, to that website, and report them. And, you know, right away, the that those people will get arrested and put in jail.
wow. They
Yeah.
just get away with that. I mean, my
Like,
previous client,
yeah,
they just agree and pay for it. They just like,
because they're
wow.
desperate. Yeah, because they're desperate. They think that this is the only way to help them versus thinking, okay, if I had this money, why don't I pay my payment to directly to the lender or somehow work it out with the lender, you know? So the unfortunate thing is that the lender wants the whole payoff, the whole
Yeah.
rears. They don't accept payment unless they give them a modification, you know? So that's the trap that they fall into. Well, I have $1,000 right now. I don't have the whole $33,000. And these scammers are like, yeah. Okay, give me your $1,000 and, you know, we can help you, whatever they can squeeze. So, but know that they can report these people and they can just shut them down right away. Put them in jail.
Thanks.
You know? You're welcome.
Appreciate it.
No problem. No problem. Yeah. So guys, anything else? I think everybody in East Coast are like about to fall
Yeah.
asleep on me, right?
The other questions we'll save for next week. Actually,
Yes.
yeah, so next week I'll connect with you, Nigel, and we'll figure out the game plan for there. Maybe we'll have
Yes.
Josh come on or something. But
Yes.
appreciate you hopping on.
No
We are
problem.
picking up traction on the SEAL team. So I know I talked to the team today. We got like 4 leads yesterday, 4 leads the day before that. I don't know how many we got today. We'll find out tomorrow morning. And then the call center is also still calling. Probably going to ramp
Perfect.
up the hours over there. So yeah, things are moving in the right direction. I'll connect with you because we do need to get some of our design stuff going. So if you have time
Okay.
to
Yeah.
or something, then I'll connect with you.
Yep,
We can get
sure.
that going.
Yep,
And
sure. And in the meantime, guys, don't hesitate to, I'm on the chat, so don't hesitate to call me or text me or whatever you need. I have that on notification. I see you guys chat and everything. If you need if you have any question or any help, I'm here. Okay?
thank you so much. We're learning so
You're
much. We're picking up momentum. Things are happening. So we really appreciate your time and your expertise.
Anytime.
Definitely.
Anytime. Great.
Thank you so
You guys
much,
have a
Nigel.
great time. We'll talk soon. Shot.
All right. Appreciate it. Have a great night there.
Bye-bye.
I'll talk to you soon.
Take care.
Bye, guys. Bye,
Bye.
everybody.
Good
Bye,
night,
bye,
everyone.
everybody.
Good night.
Good night. Good night.
Um,